What's going on, everybody? Hope you're doing well. So buyers started off the week pretty well, rotated to the high of the gateway structure above the July 2024 high, but essentially pop and drop there, and then sellers pressed the issue into the end of the week in a pretty pretty notable way. So are things as bad as they seem, or do buyers have a chance here? My name is Lamont, and I've been a full-time trader for 8 years now, part of the Chart Guys team for more than half of that, where I head up our futures room and the strong report. And in this video, we'll go over that and more. So let's get into it. All right, so starting off with SPY. Okay, let's just reset again here and focus. All right, so what has been going on these last few weeks? The last 3 weeks or so has pretty much just been a battle for this July 2024 high. You can see how the March 3rd, the week that began March 3rd, was pretty much a near miss of that July 2024 high. And then you started to see some buying before that level was even tested, which of course was a good look, but it was just the start, right? And the change of this breakdown under 590.49, so this weekly lower low, of course, wasn't negated at any point after this move lower, right? So then we had essentially 2 weeks of oscillation around this July 2024 high where you break below it briefly. And then we did not see any follow through. We saw limited follow through. The sellers saw limited follow through under this July 2024 high. And then bounced here, and we spent pretty much an entire week battling around it. Buyers pulled away. Like I said, they got all the way to the high of this gateway structure. So this is the guy that we care about primarily when it comes to evaluating how well these buyers are going to affirm the July 2024 breakout, and can they play defense by getting back into all of this supply that was established end of September or so, the third, last third of September or so. And so you can see how we essentially pop and drop over the high of that structure. And now we're way back below the July 2024 high. Sellers have made a ton of space for a potential daily lower high under 573.69. And there's also a good amount of space for these sellers to defend against the July 2024 high. So, it does not look good, right? We barely bounce on the weekly time frame. And then now you have a bearish engulfing candle. It's not a good look, but in terms of, is there any hope at all for these buyers? I would say what you're looking at is essentially you want to see either this low get taken out and then look towards the next reference, right? So really where the volume picks back up in the SPY is a little bit above or a little bit below the value area high of this guy over here from 724 to 81. So the volume really picks back up around 545. And so if you lower low here and either don't get down to where all this value was established at 545 and then pop back above it, right? Come back over this low, find acceptance back over 560.79. That would be a pretty notable hold. I think basically if lower lows next week or in the coming weeks, we should be looking at here where all this volume was traded. I would not be surprised if the sellers were to rotate all the way down to the other side of where this volume pretty much dries up around 540. And then what happens here in this, like, relatively, you can see how there's a gap here and then here, a gap here, right? And then a gap here as well. It's in the middle of the circle here, right? And then very little trade is going on here. So how the market responds to this low volume area will be very telling, especially because this was a pretty major support hold, right? This support hold over here led to higher highs. And again, there's very little volume traded here. So if we move down through this structure, the best case scenario would be like this. Come down, take out this low, don't touch this high volume area, come back above, hold over this point of control, and then make our way slowly back over the July 2024 high. And so the next best case scenario would be for the sellers, if we see lower lows, would be for the sellers to come down and then not be able to jump across this low volume area, get caught up somewhere above it, and then again do something like this, create space for a higher low, back test 560.79, and find acceptance back over the July 2024 high. So that's pretty much it. For the sellers, it's very straightforward. You're looking for a lower high now, right? Like at this point, there's so much space for a lower high. We know this gateway structure is being problematic. We know the July 2024 high is being problematic. Even like the most aggressive seller, you can already be looking for like off of this this point of control, 560.79. Why? Because, well, at this point, the need acceptance under here, this is the gateway into all of this. So the sellers will really be making a statement next week if the buyers bounce and they can hold under 560.79. That's essentially their best case scenario. That would affirm this structure as supply, and that would mean that we should be looking for test of the local price action low here at 549.68, and then down there, where, like I was saying, where there was a lot more value established, so like 550, I'm sorry, 545, and then down to 540, where that volume pretty much dries off. So something like this, I think, is very reasonable next week if you're looking for like a lower high kind of a dealio play for the SPY here. Something like this, you can even come all the way back up here, right? Because essentially, if we don't take out this high or take out this high with very limited follow through, it's all still the same, right? You need acceptance over this, the high of the structure, not just some, not just a little break of it or whatnot. So something like this, I think very reasonable, trying to get back down to 545-ish, something like that. I think very reasonable, looking for a bit of a lower high play. It can be a bit more conservative, wait for like 15-minute hourly overbought, which would probably have you start up a little bit higher. And then the most aggressive operator next week is looking for probably a session to session setup because it was a very weak close. So the potential of us gapping down is pretty good when you close a week like that. There was like very little bounce at all at the end of the session. Let me see what it looked like. And typically you get a little move at the end of the session because counter trend move at the end of the session because you have a lot of day traders who aren't going to, they don't want to carry the overnight risk, whether it's just a preference because they're just day time frame operators or because they work for some kind of firm and they have rules, right, where you can't carry that risk overnight. So typically you get a little bit of counter move. The fact that we got none whatsoever is again, pretty bearish. We'll see. Anything can happen, of course. If crypto is any indication, though, it doesn't really look that great, but we'll see. Yeah, that's pretty much it for the SPY. All right, so something like this, I think very, very reasonable, looking to play for lower lows. If you want to be a bit more conservative too, it's fine to just wait it out and see if these sellers can really, really press lower under the July 2024 high and pull away for, like another weekly lower high or something like that. Because again, when you look back at when these kinds of structures form, like this is probably the best example. Like the last time we had a major area of daily balance, this was like, I don't know, like 2 months or so. That's pretty much, it's more similar to what we got over here. I think this is a little bit longer than 2 months, but it's closer to 5. But still, that's the idea, right? The last time we had a lot of daily supply breakdown, you'll see this big V shape up, right? So you actually had a lot of opportunities to look to top fish against this much larger range, 1, 2, 3 times essentially, right? I don't know what this looks like. I'm surprised it's not pulled up here. I probably removed it for like a, I don't know. I have no idea, honestly. But let's just take a look at what it looks like here. And so we can just look at this whole structure, and then you can see, okay, value area low rejection, value area low rejection, pop and drop at the value area low, and a really clean lower high off of that value area low. So if we pull away, like maybe like double or so the range of the daily overhead supply, and then we start to look for a pullback, so again, you're looking for double this. So that would be like roughly, right? Take all of this, move it down. If we were to drill all the way down here and then make a V shape up into all of this supply, it would be reasonable, to use this as a top fish for like a potential much higher time frame lower high. So, if you don't like any of these setups here, it's not that big of a deal. I think if you want to be patient, and I've just been kind of with the day trades or whatever, it's like I'm taking pot shots at what I think is reasonable, right? Buys or sells both ways. I'm trying to focus on pairs trades, but that's just the day time frame stuff. For the longer term stuff, I do think it's a very reasonable time to be not right now, but if things were to get daily oversold again, to be aggressively DCing again. That was actually one of the better trades on this last few weeks or so, which is a good segue to head into QQQ. But before we do that, actually, just want to remind everybody that we still are just looking for a monthly higher low. There is still space for it over 510.27. I think right now we've rechased about, not quite yet, to the golden pocket. So we shall see if these buyers are interested in playing defense for a monthly higher low. So what I was saying regarding like the longer term accounts is one of the better trades that I had over the last few weeks was just aggressively increasing the DCA for the retirement accounts. I did it in two ways. I increased the frequency. Normally, I just GCA in every 2 weeks, but I doubled the frequency doing it every week as soon as we were daily oversold. And additionally, I just doubled its size. So I have a lot of runway though, right? So like if you are, somebody who is looking to deploy some longer term capital, it's reasonable to be doing that when you have this like daily extension. So the daily was oversold and starting on this day. So as soon as this day occurred, I messaged the room. I don't have it pulled up right now, but either way, message the room just letting them know, hey, listen, I'm doubling up the DCA, and then I also let them know that I was gonna chop it up if the buyers were able to get back over here on this bounce, because well, that's the breakdown level, right? And so now that we've bounced, the RSI has cooled off quite a bit here. So I'm gonna look to rinse and repeat that essentially, right? I want to find some location again, wait for the daily to get oversold, be more aggressive, lighten up, be more aggressive with the DCA on the bounce, lighten it up, and just continue to lower my basis, continue to get, will come into the market, and then also, slowly deploy this capital. So anyway, that's the way that I'm going about it, and I'm gonna do this, however long this selling goes. And on average bear markets, I'm not saying that this is a bear market, there's no predictions, but you want to plan for all of it, right? So for me, I always have at least a runway of about a year or so, which I'm willing to come into the market slowly, be more aggressive when there's more weakness, sell into strength, keep it going, and then with any like liquidity that's just kind of hanging out there, it's either in like T bonds or I am selling credit around core positions, right? Because you can use that margin to like sell cash or puts. Yeah. So anyway, that's pretty much it. And the beauty of cash or trade puts is if you're doing it in a durable asset, it's not going to go to zero. If it is going to go to zero, you have way bigger problems to worry about. Like if you're selling cash or trade puts on SPY or QQQ or something like that, you can always roll it down and out for more credit. And again, worst case scenario, you just keep kicking the can down the road. And if it does go to zero again, like it's a meltdown time, so like you're probably more worried about like canned food or how many rounds of ammunition you have. So anyway, yeah, so I think it's like, worth considering, if you got a lot of hats on, you manage your retirement stuff and you do daytime frame stuff. I think this is a very reasonable way to kind of balance those things out and not get too bogged down with worrying about how you're going to come into the market for the longer term stuff while you're also juggling the daytime frame stuff. That's just my approach. So anyway, excuse me. All right, so the Qs look even worse. Honestly, is a miss here? I think there's a miss, right? Yeah, it's funny, right? Because if we had, I honestly I was expecting the buyers to have a little bit more gusto, to be completely honest with you. So this was a miss of our sell, right? But if you take the logic of this sell, right, it was looking for the sell against the July 2025 high and against the gateway structure. And then if you were to have applied that to the SPY, that would have been perfect. But, I estimated poorly, right? I just assumed that I was anticipating, but the buyers to play, be a little bit more stronger here, but they weren't. So egg on my face is what it is. I think you can just lower this trade zone down, because at this point in time now, it's a very notable reaction, right, against this structure. So we've already failed here, and we've already failed here. So, something like this, I think, just moving it down, I think is very reasonable, just like that, right? If you get a pop and drop, but this gateway structure continues to be affirmed as supply, these sellers should be trying to move down to where there's a decent amount of volume next. Let me just zoom out and take a look here. So remember we were watching this anchored VWAP. It's been reactive here and here, and it's just anchored off of the low of this last rip up, right? This was the last major low, I would say, that was like coming out of this base. So anyway, let's zoom out here and just let this volume settle. There's not a lot of volume traded here until like 438.49, so that's actually quite notable. I would not be surprised if these sellers are trying to make their way down to like the mid 440s or so if we see lower lows next week. So if you do get a little bit of bounce here, something like this, I think makes a lot of sense. Right, essentially looking for a daily lower high and looking for follow through on the weekly lower high that was just set. Okay, so something like this I think is pretty reasonable. Actually, I want to keep that. All right. So again, if bounce next week, 480.91 becomes super key. As long as this guy is being affirmed as supply, then these sellers are now advancing really well, not just beyond the supply that's the gateway into everything under the July 2024 high, but also advancing beyond the supply that was what made these lows over here. We're trying to resolve this structure right now, and the sellers are looking like they're doing a good job of that. So that's pretty much it. Lots of space for a daily lower high. Anything under 493.62 is going to be good for one. I feel like I'm droning. Apologies. Okay, so for IWM, I'm still just watching this same exact thing. I'm like pretty much. It's not that I've given up on on the because on the small caps finding some relative strength, but I don't know with all the FUD now, and with the Fed, seemingly looking at fewer cuts, slower cuts, whatever, that's not great for these small caps. So what we were being optimistic about last year while we were building that position, which technically free position, is kind of looking like it's coming out the window here, especially from the pure technical perspective, right? What do I care about? And I care about this guy, and so whatever the fundamental backdrop is, I don't really. Even if JPOW was saying, "Man, we're super dovish right now," I'm practically a dove. He's like getting feather tattoos and whatever. Even if that were to come out, I still wouldn't trust anything unless we can get back over this guy, right? Because this is like a year or two, I forget. This is like it's a year of supply. This big guy over here, right? And so this is the gateway into this year of supply. And now we clearly pop and dropped over its point of control at 207.57, a very, very notable failure. So, again, it's not a good look by any means. And at this point, same dealio, we can be looking to top fish against this. Essentially, we're looking for a daily lower high, but this might just be more balance here, right? So we can be setting up our trades like something like this. I think is pretty reasonable, right? Looking for maybe a higher high to this val that's the value area low of this guy, right? Maybe we don't see follow through there, roll back down under it. We don't really want to give it too much wiggle room above this 207.57. So something like this, I think pretty reasonable, and we will be looking to play down to here first, right? Just this price action support, but really the next spot is going to be here, right? Because this guy over here, this balance over here, is what made for the lows of all of this, which was the first breakdown under that year of supply. And then you'll notice that you get many highs over here, over here, over here, over here, etc. So, oops. So that's what I'm looking at. Hang on, let me mark up. I don't know where the point of control went. All right. So I would say that, if you lower high, lower low, first target there, next one should be this guy. All right. So again, lots of space for a daily lower high. Anything under 209.27 will be good for one. Okay. All right. Moving on here to the Dow. All right. So for the Dow, very, very similar, right? We are flirting with the potential of all of this being major supply, right? And so what is the gateway into all of this? It's this guy, right? Its point of control is at 421.08. So we have now drilled through that. Lots of space for a lower high. Everybody, from a selling perspective, has the same thing. Now, I do know that there is supposed to be some tariff stuff. So there is the potential that if you don't, if there was no, like if whatever the tariff news gets reversed or whatever, then the markets would probably respond to that well. But either way, these are reasonable setups, even with news drops. All the news drops are just has the potential to throw a wrench into it, but I would just be looking for something like this. And let me see where the volume picks back up on the Dow. Oh wow, it's actually pretty. Looks like it's very low volume here until 390 or so. Okay, so for extended targets, you're looking for something like this. Okay, that's pretty much it for the Dow. Moving on to the dollar. The dollar, I would just continue to work it just like this. If it doesn't come into the trade zone, doesn't come into the trade zone, I would personally be pretty surprised if it didn't come into the trade zone, just because again, this balance has been shaken out like this for so long, and the buyers had a good opportunity here to try to hold over this key structure that was making rejections over here and rejections over here, rejections over here, etc. They had a good opportunity to try to hold over, and they did advance a bit, but obviously they're right back down under it now. So this sell, again, it's what we've been talking about for weeks. There's no change to this. This is the key gateway structure to the upside. as of right now, technically now this is the new key gateway structure, but either way, this was the old reference, and if we're not going to build upon that old reference, then the sellers should try to use it as a area of defense. So very reasonable to be looking for a potential, essentially a weekly lower high, a little bit higher above. And if that's going to be the case, there's also space for a monthly lower high as well. Well, you know what? First thing is we're looking for a monthly higher low, but either way, I'm thinking the more likely scenario I think is probably just further balanced within this range. So wouldn't touch that. Would run it exactly the same. NVDA also starting to look kind of weak, like we were saying in the previous videos or updates or whatnot. It's kind of looking more and more like Microsoft, right? Microsoft trading sideways for a really long time. Testing this guy again. I'm not sure where the rectangle went here. All right, so it's testing this key structure, and it doesn't look great. So it kind of looks like a lot of these guys, looking pretty similar sideways. Apple, NVDA, Microsoft in particular, I would say, look the most similar. And then those who look a little bit stronger, they're probably just, a bit of a laggard here. So Google is very similar too, right? Just a lot of trading sideways. So yeah, that being said, it is looking to backtest like just this guy over here, right? So if we were to trade sideways in a very large pattern just like this, right? So just like all of this was trading sideways, right? All of this, right, was trading sideways over this guy. If we're looking at something like that, that's not really that bad, right? Because this is a prior all-time high structure. I can mark it up, might as well. It's probably worth watching. We can probably look at this whole thing as one big chunk now. This whole thing as one big chunk. It would be fine to look at the balance of the highs as well as the bit of the gateway, but we're dealing with bigger picture stuff right now, so let's just mark this whole guy up. I know we don't normally cover Google at all. I'm just trying to, get some context, right? Like you want to build your narrative, and you want to look at a lot of data points and then get a good idea of the state of the overall market. So very clear battle for all of this back here. Notable hold of the value area high. I'm curious to see how price has responded to the high of the range. Oops. Yeah, so for Google, even if we were trading sideways like this over this guy, it's all good. So for NVDA, it's honestly still looking a lot stronger than Google or Microsoft or whatever, because there's a lot of space between the next area where there's a ton of volume traded here. Could we make our way down there? Sure, absolutely we could, but that would be pretty notable. And I honestly I would back up the truck, honestly. I don't really see how NVDA, NVDA is unlikely to be disrupted by another semiconductor company. It's very unlikely that that's going to happen. It's more likely that they'll be disrupted, just like Google's being disrupted right now by ChatGPT and large language models. It's more likely that NVDA will be disrupted by another technology, maybe quantum, I don't know, or like a new chip, like design or something like that, like something that, I don't know, maybe it's new material for the chip that can allow for whatever, more conductivity or whatever. Anyway, so that's yeah, that's how I'm looking at this thing bigger picture. I'm very interested in it here, and then if we were to just get into this low volume area, well, then that would be very problematic, and I'm not going to try to make any guesses on what's going to happen in here because there's just very little volume traded here. I would just let the market see, show me what it's going to do. If it were to come down into here, don't come into here, start trading sideways, break out above it, okay, we can look for a backtest play here, trying to get back to the highs of this local range. But for now, in the near term, I think lower lows into this guy, get things daily oversold for the first time in a really, really long time. Maybe even get weekly oversold. Is that too much to ask for? It's possible, a little bit lower here. If we enter this low volume area, it's very possible. I would be very interested in NVDA, especially if we can get the extension into this location. It worked like gangbusters last time. Doesn't have to work again like gangbusters, but we do what works until it doesn't, So that's what I'm doing. If we start getting daily oversold, I'm probably just going to start selling some CSV, some cash regard puts just as a starter, and then we'll see how that goes. That's pretty much it for NVDA. It's not looking great. Daily uptrend has been lost. Space for a lower high under 122.22. I'm still primarily interested over here. I'm really not too interested in being like a shorter term seller, like an intermediate term seller in this asset, so I'm not even gonna set that up. But it, if you were so inclined, it's really just a back test of this local supply that I would be playing for, trying to get back into here. All right, so Bitcoin, not a lot happening, right? We had a daily higher low, higher high, not see much follow through, and it's not too surprising that we're seeing a lot of battle here, right? At the value area low over here and over here of this key structure, right? Because this was what was supportive throughout all of this balance here. It's the consolidation after this big rip up. So what's the market doing right now? The market is trying to either affirm or negate this big rip up. And in order to affirm this big rip up with the most confidence, you have to get back over this guy. And so it's not surprising that we're seeing pop and drops at its key levels. It's notable here, right? So the weekly lower high is potentially it's very, very close to being set here. So we have 19 hours on this candle, and then if we were to break 8160 or 8.99, assuming we don't just break 81125 before that, before the 19 hours is over, weekly lower high is set. And so if we do see lower lows, it's right back to eyeing this guy, right? These sellers, this is so clearly their objective. They have to negate this breakout by finding acceptance back under 73835.57 to really start putting the pressure on these buyers, right? Right now, all of these sellers are putting pressure on any buyers that are over here, which are very late location buyers, right? But there's a lot of folks who are buyers in here, so they, in order to negate all these buyers who, said, hey, listen, we think new highs relative to 73835, you got to get back under there. And so far, again, very notable that they're getting stalled right here. It's not that much balance here, just 5 days of balance. If you zoom in, it's not that much. So the fact that they, lower load into there, no follow through is notable. I would not be surprised if we are going to look for some balance with under this supply and over this demand in the, near term. I wouldn't be surprised if that lasts quite a while. Obviously, if the wheels start falling off of the overall market, okay, that's a different story. But it's just not really how the market's been moving lower. The market's been kind of moving lower in relatively choppy fashion. Oops. All right, relatively choppy fashion. A lot of balance here, a lot of balance here, a lot of balance here. So we'll see if the sellers can really start pressing the issue here. But as of right now, it doesn't really look like an all-out, what do they call it? Throw the baby out with the bathwater or whatever. Yeah, so space for a daily lower high, anything under 8804.64 will be good for one. But honestly, these price action trends while we're dealing with all this chop are going to be a little bit janky. So that's pretty much it. Moving on to Ethereum here. Oh, that looks terrible. So Ethereum pop and drop, didn't make it to the high of this key structure over here, which is the gateway into all of this. So essentially, that's about the weekly lower high is already set here. Weekly lower high is technically set with this bearish engulfing. I mean, it depends on how much of a purist you are. A lot of folks, if it's the same candle, wouldn't really consider that to be the lower high really being set. But I think technically, I would call it that. So daily higher low, higher high, no follow through, space for a lower high under 2104.21, and I think it's a very reasonable sell at this point now, right? It doesn't look good. Honestly though, I hate being so late to the move. It's like multiple months into it already, and you are testing this major area of like higher time frame demand. So you know what? I don't think I would set up. There's just a lot of demand here, So even though we are advancing, we're too late into this move for my taste. Like it's reasonable to be looking for top fishing plays against this local area of daily supply, but I'm not going to do that. I wouldn't do that. I would prefer to see a little bit of a rally here and maybe look for like a potential lower high where there's a lot more volume traded. It looks like in this middle volume. So yeah, if we were to rotate all the way to the other side over this kind of big volume block, get things really extended. Okay, top fishing play, looking to get back down to the lows of the range. I think it's pretty reasonable. URA, not great. So initial bounce out of our trade zone. I think last week we suggested, of course, to pull the lower bids, chop it up. If you stop it out, reset it, and you can still be using this as the framework for the trade. But after seeing this initial bounce come back in, these buyers really need to step in here if they want to continue to hold over all of this demand. This is kind of the reason why I'm not too keen. This is a very similar situation as to why I'm not too keen on being a seller in Ethereum. It's just kind of really late into this move here. So I don't love it personally to be looking for a lower high here. It's just this is all bigger picture balance, holding over this guy, holding under this guy. So I think I would prefer to just be looking for a responsive trade like this. Even if sellers were to drill lower here, if we don't find a lot of acceptance, make a lot of follow through back over 23.13, I would prefer to look for a higher low play like this. Alternatively, if they really drill lower, right, if they drill through 23.13, okay, fine. Let's look for a top fishing play here. and then we'll look to play to the lows of this range. Okay, yeah, we'll go back in time and then get to the lows of this range. So that is pretty much it for URA for show and tell today, and I do appreciate also feedback. I got a lot of encouraging feedback regarding the review components to these videos, so that's awesome. So for review today, I have pretty much very similar content to last week. I didn't really get much done. I didn't really get much off the ground this week. I got some stuff going on, making like I just got some stuff going, so I'm a little bit busier, but been hectic, and so that has made me a little bit more cautious. The market has been very choppy as well, so that's made me pretty cautious as well. And so I didn't really get much going in the early part of the week. And even this session really wasn't that amazing or anything, but I do think that it was a good session because, firstly, and I don't have the video, obviously, I'm not going to play a video for you, but for the morning rundown in this session for Thursday, I think March 27th. I try to be fast, we're 30 minutes long. March 27th, for the morning rundown, I talked about a pairs trade again, because on Thursday we were looking at it like this, right? So on Thursday is over here, and we were gapping down, a little baby gap, I think, but we had space for a higher low over here, right? We're back testing all of this daily demand, and we were looking at a potential back test of the July 2024 high. So, if these buyers were going to play some defense here, it would have been here, and they do play some initial defense, but you'll notice that where the defense fails is right there, the breakout point, right? So remember, always think about the market from the perspective of change, right? And if you follow me on Twitter, then I tweeted about this, and you can you can hit me up there if you like, and just stay updated on, essentially, if you're like not part of our community, and you are watching these weekend videos, you might as well should follow me on Twitter too, because then at least you'll get some updates during the week as to, where do we stand relative to what was discussed on these weekend videos. So I think the link's in the description below. I don't really handle that stuff, so but I think it is down there. Anyway, yeah, so notice the defense was very notable location. Of the buyers was very notable location, and then the defense from the sellers, again, very notable location, right? So this is kind of, again, like how you want to assess the market, right, is just based off of your references. It's just like anything else in life, right? Like all you have are your references. How are people treating you? Do they smile at you? Are they friendly? Or do they put masks on when you approach? Is there a bulge in their waistband or whatever? These are very different situations, right? And it's all market generated information that we use to contextualize things. So while this was a very notable defense for these buyers, this was also a very notable failure on the buyer's part to not get back over this high, which was necessary in order to affirm this breakout that they had in the beginning of the week. So because of the precarious nature of the market, right? I know we're oscillating around the July 2024 high. I know I want to give these buyers a chance, right? Because if we do happen a higher high here, if we held here the July 2024 backtest, the odds of us balancing like this would have greatly increased, right? Because essentially we're saying, okay, we're not coming back under the July 2024 high. We should expect price action like this. Now, that's obviously not what struck out. But if you look at the rut was also in a pretty not great place, right? You already popped back under that key point of control from that 2020, that key 2021 structure, and the open on the rut on Thursday looked like this. We were here, right? And so we were under the prior day's point of control, and so that's a weak start, right? And so I was willing to play the SPY, the ES, off of the July 2024 high, or I think I even tried one aggressive one on the open. And I was open to hitting the sell on the rut. Oops, apologies here. On the rut here, because I figured, okay, well, if we lower low here, they should be trying to come here, So that's what I did on Thursday, hit the pairs trade, and that was very effective. I still think, from a day trading perspective, it's going fine. From a swing trading perspective, honestly, there's a lot of room for improvement. I think I'm just being too stingy with risk still, honestly, but whatever. So anyway, I'll walk you all through it. if you care, so try to be fast. Trying the aggressive ES pass back over. That's like right away open, starting off in the session. And that just looks like this. We're over here on Thursday. And so we saw the open like this, right? And I just bought that first pass back over the open, throw my stop under the low. It was pretty cheap, like 6 points risk or whatever per contract, and that was a stop out. And then at the same time, I sold, or very soon after, I sold the RTY pass back under the DIVA. That was at 932. So at 932, it looks like this. Oh, okay, I was talking about it with somebody. There was a hypothetical stop. It was not like that. So I sold this. Here's the open, right? Oops. Here's the open, and then there's the developing value area high in the DPOC. And so I just sold that pass back under the DIVA, right? Pass back under, that's what PBU is, DIVA. And I was looking for a chop here where there's like, you know, the first place where there was any kind of demand, the next area of demand. So that's already a 3.8 R trade, right? That's pretty sweet. And then I took another exit at the regular trading hours low. Excuse my kitty there. Took another exit here at the regular trading hours low, and then the last exit that I took, so stop the ES, chop the RTY, out more RTY above the regular trading hours low, and then I took the rest out at the value area low of that 2021 structure, and I don't regret that, even though we did see a little bit of lower lows here, because after that lower low, the last exit was like somewhere over here, so that's like a 9R trade. And I don't regret that, because if you look at what happened afterwards, we did rally over there, right? So if you pull up this chart and you look at this Thursday, you'll see that here, right? So I took it off right there. Why? Because, well, if the sellers are going to start having any problems, it should be there. Lo and behold, they had problems there throughout the entirety of the session, right? Now, obviously, they advanced the next day, but that's the morning stream day where I just don't have a good hit rate. So I don't have a good hit rate when the market is choppy. So I haven't really been doing too much trading while streaming. I also realized that a lot of my edge comes from seeing everything laid out as I'm used to it, and then when I stream, I stay so focused on this corner where I stream out of that I realize I'm not synthesizing all the information that I normally do. Anyway, and then let's see, we did it again. Oh, okay, so because the ES was still, because the ES was still holding over this guy, holding over the July 2024 high. At this point, I stopped out the ES early in the session, and then I tried to pass back over the overnight low, stop under the low of the day, and then I was looking for the chop under the low of the open candle. So I'll walk you through that. On the ES that's over here, oops. Let's see, what time was that? That's like over here, I think. Let me see. 9:49. Yeah, that's this, right? So at this point, right, we come down, and then we drop and pop at yesterday's point of control. And so at this point in time too, that's roughly, I believe, let me just make sure here. Where's Thursday here? Yeah, so that's roughly the July 2024 high as well. So I just bought the pass back over the overnight low after this test. Wait, is that Thursday? Wait, that's not the right price action. Hang on a second here. What the heck? Thursday at 9:49. Why does it look so different? Oh, this is Tuesday. What a silly goose. Okay, so at 9:49, yes, okay, this makes a lot more sense. All right, so we're over here, and we are coming back down to test this key level, right? 9:49, we're at this July 2024 high. So I just bought the pass back over the overnight low, and at that point, the overnight low was over here. Here. All right, so here's the overnight low. I'll have to remember to delete this. Spot that move back over the ONL, and then I was looking to take a chop out under here, which was the open candle. And so get that chop out. Stop was under this little rinky-dink 1 minute higher low. got the chop, walked it to, oh, I'm sorry, walked it to the higher low above the ONL. Oh, no, I'm sorry, that was this walk. So this walk to this walk, and then I went to go get food. Later on in the session at 1 o'clock, I get stopped the runner. So it comes all the way back down to the entry, like somewhere over here, I think. 10, hang on a second, let me kill this now. 103, somewhere over here. Yeah, somewhere over here, I get taken out. Like, you tick me out practically to the tick. Whenever that happens, I'm like always ready to fire off again because the context is still pretty much the same. And if the risk is cheap, then no problem. So I just did it again. Stop the ES runner, bought an SS break, the 1 minute stair step break, looking for a chop under the open, stop under the local low, and the open was over here. So just bought that SS break. I actually got a better fill because it didn't actually break. I was just looking for that pass back over after there was no follow through over here. Chopped it up at the open, and then stopped out the rest later. That was it. So not a home run at all. The RTY trade was pretty good and definitely made up for that the ES stop was free actually. So it was a fine session, but what I care primarily about, not really the trade specifically, but was thinking through the entirety of both of the pair trades in the morning rundown, describing it in the morning rundown, and then following through, right? I just think it's so important to think through the entire idea, right? Like it's one thing to have an idea, I'm going to be a buyer here off of this level or whatever. It's another thing to think through, okay, I want to be a buyer if this context remains the same. What are the things that need to change in order for the context to remain the same? And additionally, are there implications for the opposite side? Are they strong, right? Like, is there good indication that the complete opposite trade could work? If so, is there an asset where that idea would work better? Okay, yes. Okay, what is the context of that daily chart, right? Which again was the IWM situation, right? We're already coming into a couple of days of selling, and so we're so close to that value area low target. It sure makes sense that these sellers should try to get there. So just thinking through both sides, right? Like thinking through for the long, you're thinking through, okay, these are all the places in which I would be comfortable being long. For the sell, I'm thinking, okay, this is the asset that I'm comfortable being a seller. I would be comfortable doing it like this to here. Just think through the whole thing because you want to remove as much action necessary in the moment, right? You just don't want to have to stop and think because things happen so quickly that when you're stopping and thinking, like it's really easy to fall behind. It's kind of like if you didn't learn a dance routine or something and then you just show up and then now everybody's doing it and you're just trying to copy. It's kind of like me trying to do Zumba with my wife, something like that. She loves that shit. Oh, oops, she loves that stuff, and I like making her happy. So trying it, and it's like I feel like a dummy. Like I just feel, So it's just everybody makes it look so easy, but it's not. So anyway, that's pretty much it. I appreciate you guys tuning in. If you made it this far and you got something out of this, if you wouldn't mind hitting us with a like and subscribe, would appreciate that very much. Costs you nothing, helps us out a lot. And if you are interested in trading along with a bunch of knuckleheads learning about VP, we primarily trade futures contracts, but we talk about everything. So check out the community. Links in the description below. If you're interested in this report, which is just 2 novel ideas sent to your inbox every week. Dan gives you an update. I give you an update. I will live call any kind of action that I take for these trades. Give the swing report a shot. I think it's still on sale right now. I really should know these things. I think today is the last day for the sale. It's just 50% off the first month, which is I think $35. So $1, whatever, coffee money or whatever. Anyway, if you're interested in that, give us a shot. Links in the description below. That's pretty much it. Again, appreciate y'all tuning in. Thanks for sharing some of your time and energy with me. I hope you enjoy the rest of your weekend, and I hope to see y'all next time. Farewell.